Right, let's talk about something that's probably keeping a lot of you up at night. Your mortgage has basically doubled. The Bank of England is issuing warnings that sound absolutely terrifying, and everywhere you look, there's talk of a massive housing crash heading our way. Now, I know that sounds scary, and honestly, some of it is, but here's the thing. I've spent the last few weeks diving deep into the actual data, the real numbers, and what the Bank of England is actually saying versus what the headlines want you to believe. So stick with me for the next few minutes, because by the end of this video, you're going to understand exactly what's happening, why it's happening, and most importantly, what you can actually do about it. Let's get into it. What's going on, everyone? Welcome back to the channel. If you're new here, this is where we break down everything happening in the UK housing market without all the confusing jargon and the doom-mongering that you see everywhere else. Now, today's video is a big one. We're going to cover why mortgage rates have essentially doubled over the past couple of years, what the Bank of England's warnings actually mean for house prices, whether we're genuinely heading for a crash, and crucially, what this means for you whether you're a homeowner, a first-time buyer, or someone thinking about investing in property. Before we dive in, do me a quick favour. If you find this video helpful, drop a like down below. It really does help the channel, and it means I can keep making these videos to keep you all informed. Right, let's crack on. So first things first, let's talk about these mortgage rates, because this is where the real pain is being felt right now. Cast your mind back to 2021. Seems like a lifetime ago, doesn't it? Back then you could get a 2-year fixed-rate mortgage for around 1.5%. Some deals were even lower than that. 5-year fixes were sitting at about 1.3%. It was absolutely mental when you think about it now. Fast forward to today, and what are we looking at? The average 2-year fixed rate is hovering around 5.5 to 6%. 5-year fixes are somewhere in the 5 to 5.5% range. That's not just an increase, that's a fundamental shift in how much it costs to borrow money to buy a house. Let me put this into real numbers for you, because percentages can feel a bit abstract. Let's say you've got a mortgage of £300,000. Back in 2021, at a rate of 1.5% on a 25-year term, your monthly payment would have been around £1,200. Now take that same mortgage at today's rates of, let's say, 5.5%. Your monthly payment jumps to around £1,850. That's an extra £650 every single month coming out of your pocket. Over a year, that's nearly £8,000 more you're paying. And here's the really scary bit. There are roughly 1.5 million households in the UK who fixed their mortgages during those rock-bottom rate years who are due to remortgage in the next 12 months. These are people who are about to go from paying comfortable amounts to suddenly finding hundreds of pounds more being taken from their bank accounts every month. The Bank of England has actually done the maths on this, and they reckon that about 4 million households will see their mortgage payments increase by an average of £250 per month by the end of 2026. Some will see much bigger increases than that. Now I know what you're thinking. How did we get here? Why have mortgage rates gone through the roof like this? Well, it all comes back to inflation. You've all felt it, right? Everything's gotten more expensive. Food, energy, fuel, the lot. At its peak, UK inflation hit 11.1% in October 2022. That's the highest it had been in over 40 years. The Bank of England's primary job is to keep inflation at around 2%. When inflation started running away, they had one main tool to bring it back down: interest rates. Since December 2021, the bank rate has gone from 0.1% all the way up to 5.25%. That's the highest level since 2008. When the Bank of England raises their base rate, lenders increase mortgage rates. It's that simple. The cost of borrowing goes up across the entire economy, which in theory slows down spending and brings inflation back under control. And, to be fair to them, it's starting to work. Inflation has come down significantly from those peak levels. We're now looking at figures around 3 to 4%, which is still above target, but much better than where we were. The problem is, while this might be good news for the economy overall, it's causing real hardship for homeowners and completely freezing out first-time buyers from the market. And this brings us to what the Bank of England has actually been warning about. Right, so let's address the elephant in the room. This housing crash warning that everyone's talking about. Now, I want to be really clear here, because I've seen a lot of sensationalist headlines taking what the Bank of England has said completely out of context. So let me explain what's actually going on. The Bank of England conducts something called stress tests on UK banks. Basically, they create worst-case scenarios to make sure our financial system could survive a major economic shock. It's like testing whether a bridge can hold up under extreme weight. You want to know before something actually goes wrong. In their latest stress test scenario, they modelled what would happen if house prices fell by 25%. Now, this is a hypothetical worst-case scenario, not a prediction. There's a massive difference between the two, but of course the headlines just ran with Bank of England warns of 25% house price crash, because that gets more clicks. However, and this is important, the bank has also expressed genuine concerns about the housing market. In their financial stability report, they've highlighted that household finances are under significant strain. They've noted that many borrowers are vulnerable to further rate rises, and they've acknowledged that the adjustment period for those coming off fixed-rate deals is going to be challenging. The Financial Policy Committee has specifically said they're monitoring the situation closely because there are real risks here. If too many people can't afford their mortgage payments, you get forced sales. Forced sales push prices down. Falling prices means some people end up in negative equity, and when people are in negative equity, they can't sell, they can't move, and the whole market seizes up. This is the actual warning, not that a crash is definitely coming, but that the conditions exist for one if things go wrong. It's a subtle but crucial difference. So with all this going on, what's actually happening to house prices right now? Let's look at the real data. According to the latest figures from Halifax, house prices have fallen from their peak in late 2022. At one point, the average UK house price was around £293,000. That's now dropped to around £280,000. So we've already seen a decline of about 4 to 5% from the peak. Nationwide's figures show a similar picture. Prices down a few percent from their highs, but not collapsing. The market has definitely cooled, but it hasn't crashed in the way some people were predicting. Here's what's really interesting though. The number of transactions has dropped significantly. Fewer people are buying and selling. This is because sellers don't want to accept lower prices, and buyers can't afford the higher mortgage rates. The market is essentially stuck in a standoff. Estate agents are reporting that properties are taking much longer to sell. The average time on market has increased substantially. And the number of property listings has actually gone up, as some people are being forced to sell despite the difficult conditions. Regionally, there's huge variation. London and the South East, which saw the biggest gains during the boom years, are seeing the largest corrections. Meanwhile, some areas in the North and Midlands are holding up better because they weren't as overvalued to begin with. Alright, the £1,000,000 question. Are we heading for a proper crash? Look, I'm going to be honest with you because I think you deserve straight answers rather than clickbait predictions. Nobody knows for certain. Anyone who tells you they know exactly what's going to happen is either lying or trying to sell you something. What I can do is lay out the factors on both sides and let you make your own informed assessment. Arguments for a crash. Mortgage rates are significantly higher, affordability is stretched to breaking point, many households are about to face payment shocks, forced sales could create a downward spiral, and historically, house price to income ratios are still very high. Arguments against a crash. The UK has a fundamental housing shortage. We simply don't build enough homes. Unemployment remains relatively low, and people with jobs generally try everything to keep their homes. Lenders are being more proactive about helping struggling borrowers than they were in 2008. And many homeowners have significant equity buffers that would protect them even if prices fell. My personal view? I think we're more likely to see a slow grind down rather than a dramatic crash. A period of stagnation where prices drift lower over several years, eroding the gains of the boom period rather than collapsing overnight. The 2008-style crash happened because of a fundamentally broken financial system and widespread reckless lending. Those conditions don't really exist today. Lending standards are much tighter, banks are better capitalized, and the regulatory framework is stronger, but that doesn't mean everything's fine. For individual households facing huge mortgage increases, it doesn't really matter whether we have a crash or a slow decline. The financial pressure is very real either way. Right, let's get practical. What does all this mean for you specifically depending on your situation? If you're a homeowner on a fixed rate deal ending soon. First of all, don't panic. but do act. Start looking at your options at least 6 months before your deal ends. Many lenders will let you lock in a rate up to 6 months in advance, and if rates drop before completion, you can often switch to the better deal. Speak to a mortgage broker, not just your current lender. Brokers can access deals from across the market that you won't find on comparison websites. In this environment, that could save you hundreds of pounds per month. Look at your overall finances. Are there areas where you can cut back? Can you extend your mortgage term to bring down monthly payments? This isn't ideal because you'll pay more interest overall, but it might be necessary to stay afloat. And if you're really struggling, speak to your lender early. They have obligations to help borrowers in financial difficulty, and there are options like payment holidays or temporary interest-only arrangements that might help you through a difficult patch. If you're a first-time buyer, this is genuinely tough, and I won't pretend otherwise. The combination of high house prices and high mortgage rates means affordability is stretched to the limit for most first-time buyers. However, there is a silver lining. Sellers are becoming more realistic about prices. There's room for negotiation that simply didn't exist 2 years ago. If you're in a position to buy, you may well be able to get a better deal than the asking price. Also consider that if you're paying rent anyway, you're essentially paying someone else's mortgage. Running the numbers on whether buying makes sense for you, even at higher rates, is worthwhile. Look into shared ownership schemes, lifetime ISAs for the bonus towards your deposit, and other government help that might be available to you. If you're thinking about selling, be realistic about your expectations. The price your neighbour got 18 months ago is probably not achievable today. Overpricing your property will just mean it sits on the market forever, getting stale and ultimately selling for less than if you'd priced it correctly from the start. If you need to sell quickly, price competitively. If you can afford to wait, you might consider holding off to see how the market develops over the next year or two. So where do we go from here? The big question everyone wants answered is, when will interest rates come down? The Bank of England has been clear that rates will remain elevated until they're confident inflation is properly under control. Most economists are expecting potential cuts in late 2024 or 2025, but this depends entirely on how inflation behaves. Even when cuts do come, we're very unlikely to go back to those ultra-low rates we saw before. The 1 to 2% mortgage rates were a historical anomaly, not the norm. A more realistic expectation is that we might settle somewhere around 3 to 4% if things go well. For the housing market, I think we're in for a period of adjustment. The excesses of the boom years need to work their way through the system. This could take several years. Those expecting a quick return to rapid price growth are likely to be disappointed, but housing remains a fundamental need. People need somewhere to live. And as long as we continue to underbuild relative to population growth and household formation, there will be underlying support for prices in the long term. Look, I know this has been a lot to take in. The situation is genuinely complicated and there are no easy answers. If there's one message I want you to take away from this video, it's this. Stay informed, plan ahead, and don't make decisions based on panic or fear. The headlines want to scare you because fear drives engagement. But making good financial decisions requires calm assessment of the facts. Whatever your situation, whether you're worried about your mortgage, trying to buy your first home, or just trying to understand what's going on, knowledge is power. The more you understand about what's happening and why, the better positioned you are to navigate it. If you found this video helpful, please give it a like and subscribe to the channel. I post regular updates on the UK housing market, breaking down the data and explaining what it means in plain English. Drop a comment below telling me your situation. Are you worried about remortgaging? Are you a first-time buyer struggling to get on the ladder? I read every comment and it helps me understand what topics to cover in future videos. Thanks so much for watching, take care of yourselves, and I'll see you in the next one. Check out my other videos on UK house prices and the property market. Subscribe for weekly updates on everything happening in UK housing.